Hey everyone, I'm Oliver Bogner, managing partner of the Advisory Investment Bank. We're a lower middle market investment bank focused exclusively on all things essential service businesses: HVAC, plumbing, pest, fire safety, electrical, landscaping, pool, elevator. This is all we do 24/7. Our mission is really to defend Main Street against Wall Street. Wall Street continues to get really smart. All these private equity backed consolidators and platforms are really, really smart about how they do these deals and how they get off market deals. We exist to defend you, get the best price. I'm a 2 times Forbes 30 under 30 honoree, 2 times Inc. 5000 CEO. I built and sold 5 of my own companies, sold them to private equity firms and strategics. And most recently, my investment bank, the Advisory, third quarter in a row, named top 5 lower middle market investment bank in America by Axial, the definitive guide to all things lower middle market. Now, we were number 3 yet again for Q3 2025. Really, really proud of that, against 4,000 other firms on the platform. So we know what we're doing, and we know how to really protect Main Street against Wall Street. So today in this video, I'm going to break down 7 things your advisor should tell you, but probably won't. And we do tell all of our clients these things, but really important to understand kind of 7 key things that go into the sale process that aren't necessarily talked about day one, right? So number 1, buyers almost never start with their best offer, right? LOI isn't the finish line, it's a starting place. And 80% of founders leave money on the table because they just assume, hey, this is a great opening offer, I want to take it, best offer wins. They're not going back and forth. In a typical process, we have 3, 4, maybe even 5 rounds of back and forth with buyers. Now, buyers don't love it, but we get them to step up to the plate. We get them to give our clients the very best price. Typically, there's at least 20, 30, 40% wiggle room in the deal. We'll talk about structure components, but that initial offer is never the best and final. So number 2, pricing is only one lever. So you're going to see this come up in the deal. It's the enterprise value, right? So enterprise value is determined off of a multiple of the adjusted EBITDA. There's other videos that talk about how we come up with your adjusted EBITDA. Again, get the right advisor, whether it's us or someone else. You really want to come up with that adjusted EBITDA that can pass a quality of earnings. Pricing's only one lever. Structure, earnouts, rollover, reps, warranties can really change the total outcome of the deal by millions, even if it's at the same headline price. So what is typical structure? The main structure we see in deals is rollover equity. So I'm going to do some fun math, right? Let's say the business is $1 million and we were able to get you an 8 times price. So we were able to get you an $8 million enterprise value. And the buyer wants to give you 80% cash, 20% stock. So that means you're going to walk away with $6.4 million and you're going to reinvest $1.6 million into the overall platform. Now, what does that $1.6 million of stock turn into? People talk about this idea of second bite of the apple. Second bite of the apple is really, really important, especially in the lower middle market. So let's say the HVAC business is sold to a company that's doing $20 million in EBITDA, $100 million top line. So $20 million EBITDA HVAC platform today is probably trading, depending on how much is recurring and kind of new construction exposure, I would say safely trading for 15 times. So that overall business is worth $300 million. Now they're trading at 15 times and they were willing to buy you for 8 times, right? So they made money day one on the spread, right? Just by you being part of the platform. Their business now at 21 million EBITDA is now worth $315 million. So they paid you $8 million and they got $15 million in value. They make money on the spread. That's one way these private equity backed platforms make money. Just doing deals, they make money, right? 1 + 1 = 4 day one. How do they get 1 + 1 to = 5 and 1 + 1 to = 6? Lots of other levers to pull. Buying power. There's other videos talking about this. I won't kind of belabor the point. But pricing's one lever. This earnout, we're talking about this earnout structure. So back to the scenario. You rolled $1.6 million of equity into the business. Now, let's say when this business sells, and let's say the 1.6 million is worth, today, it's worth 0.005%, right? So less than half a percent, right? That means when you go to sell the business, ideally, that will be worth somewhere between 3, 4, 5 times, right? So that $1.6 million, when the platform actually goes to exit, to sell to a competitor or sell to a bigger private equity firm, that $1.6 million of equity should be worth 4.8 million. If they do really well, maybe it's worth 8 million as well. So you got paid twice, right? So pricing's only one lever. That initial cash up front, really understanding what that second bite of the apple, rollover equity, and then another element of deals we see is earnout, right? So earnout can be a way to get to that price, right? But earnout definitely plays a role in a lot of deals, especially to get to that high enterprise value. Earnout could mean we're super bullish on the business, the owner's committed, going to stick around for another 2 years, and this is what we think the business is going to do. And there's kind of this carrot, this bonus to get you to hit that, right? So pricing's only one lever, structure, earnout, rollover, reps warranties, all of these are really important and why it's critical to have an advisor helping you through the process. So number 3, the right process beats the right buyer. Just in HVAC alone, and when I say HVAC, I mean HVAC, plumbing, electrical, right? They all are buying kind of those 3 trades. One buyer is one option, right? And there's a lot of buyers that want to get off-market deals. They want to build a rapport with you. They want to build a relationship with you and tell you, we are your best friend. We are the right buyer for your business. One buyer means you have one option. You're not going to get the best price. Competitive process means you have multiple options, multiple offers. Our typical process on a bad day ends in at least 5 offers for a client. On a good day, depending on the quality of the business, we've seen as many as 20 offers. And typically we could get a whole lot more. We just don't want to waste the client's time. We don't want to talk to independent sponsors or search funds. We really just want to talk to strategics because strategics pay the most and have the best structure. But the right process beats the right buyer. So if you feel like you've fallen in love with this buyer, I promise you, you need to talk to the entire market before selling your baby. This is your life's work. We do this every single day. You've got one opportunity to sell your business for the right price to the right partner. You want to talk to everyone. We want to have you talk to 10, 15, 20 buyers for them to really get to know you, you to get to know them, and then you to ultimately make the decision on who you believe is the right buyer for your business. Number 4, your narrative is worth more than your numbers, right? So valuations rise when buyers see that future potential, not just past performance. So most businesses are trading off of a multiple of TTM, trailing 12 months adjusted EBITDA. But the story that we're telling, how we're prepping you for that management presentation, really is what drives up that value. Are you emotive? Are you excited? Are you passionate about the business? You can tell I'm very, very passionate about what I do. Lower middle market investment banking for essential services. It's my life's work. It's my passion. We want you to talk about your passion, your excitement for the business when we're meeting buyers, right? So you are selling the narrative. You're saying, hey, I'm doing HVAC today, but I could do plumbing. I could do electrical. I'm doing pest today, but I could do exterior lawn. I could do fur, right? There's all these levers to pull, and you can be the steward of that. Number 5, you're not selling a company, you're selling confidence, right? Cleaner the data, more leverage we have. If we have total transparency, we're not hiding anything, we're going to get the best price. So we really want to sell confidence every step of the way. It's why we typically want to go to market when we have a really, really strong TTM behind us. We know, hey, this TTM is really strong, trailing 12 months. The last 12 months of the business was really strong. It was up over the last 3 years or up over the last 5 years. And then we know that go forward months are going to continue to be strong because we do typically release monthly data to buyers as we're going through a process going, hey, we might be in October right now. We haven't given you the October numbers. You only have up to September numbers. We want to show you those October numbers. We want to show you those November numbers. We want to continue to say, we're very confident in the business you're buying, and here's the amazing, data in front of you. Number 6, the best deal isn't always the highest price. Terms matter. Wrong partner, wrong structure can destroy what you build, right? So we really want to get the right terms. What's the earnout? What's the structure? Is the stock actually going to turn into anything? Is this such a big business that the stock is already at the highest value it's ever going to be? Is this earnout unachievable, right? So best deal is not always the highest initial price. We really want to look at the overall structure of the deal. And number 7, silence is a negotiation strategy. So smartest advisors know when to say nothing and let the other side talk themselves into a better offer. So this is part of our strategy. We like to give kind of little breadcrumbs when we're trying to get a price up, right? Here's what I got from your competitor. Can you do better? I'm not even countering you. I just want you to come in with a better offer. So Again, I'm Oliver Bogner from the Advisory Investment Bank. We continue to do these videos to just educate the market on what's happening, right? It's a really, really exciting market. There's tons of activity. There's hundreds and hundreds of these Wall Street backed private equity firms that love essential services and are building these really exciting platforms, these quote unquote aggregators that are rolling up the industry. It's really important as you're navigating this, whether you are in your 40s or 30s and you want to, just take some chips off the table and sell, or whether you're looking to retire, it's really, really important that you understand what's happening in the market and how to actually get you the best price with the best terms, best structure, and ensure that you've got a great deal. So feel free to reach out. We're around theadvisoryib.com. I'm Oliver Bogner, managing partner. Until next time.